And we thought today we have to go with Washington H. Soul Pattinson, the one that sounds like a chemist but is anything but. One of the oldest listed companies on the ASX with, let's face it, a really incredible track record of shareholder wealth creation. And they are set to snap up their peer, Milton Corporation, in a mega merger, creating a combined company with nearly $11 billion in market cap. So the offer that's been lobbed is about $6 per share. That's a 20% premium to the last traded price, and you also get a bunch of lovely fully franked dividends if you are a Milton shareholder. The move comes mere months after Soul Patts ditched its bid for Regis Healthcare, so they've certainly been keen to snap up something. Mark, does this deal make sense to you?
I honestly couldn't tell you because I've never looked at Milton because it's never passed any of our filters. We like Soul Patts though. I mean, that is a brilliant company, and it's had. I think they've got a history of 120 years of, is it 120, something like that, years, a history of never missing a dividend.
Them and
right through the Second World War.
Yep.
Yeah, or Brickworks, and they have a complementary or cross shareholding with Brickworks. But the thing with Soul Patts, of course, is they've had the accounting problem of having minority interests in companies and how you deal with that. So they've always looked like their return on equity was lower than it probably really was.
Yes.
But we had Robert Milner in. I think a few months ago, and it's a fantastic business, founder-led. So I've got a lot of confidence in them. Price-wise, it's a bit difficult because they had a massive jump because of I think it was to do with the TPG sale. So their earnings have sort of rocketed up, and they're usually very, very stable at a fairly modest growth rate, which is fine. And it's difficult to say how good this acquisition is because the performance of that company is pretty poor. So that doesn't mean it's not a good deal.
Right.
I just know nothing about it.
Yes. Okay, Robert.
But I have a lot of confidence in the management.
Look, they're very good at spotting value themselves. I guess that's evidence.
And they're very Buffett-style investors. I mean, you can really look at Soul Patts and say it's a bit like Berkshire Hathaway, really. It's about the only thing we've got that's pretty close to it, I think.
Well, first time I met the Milners was actually at Berkshire Hathaway at the 50th anniversary.
Oh, really?
Yes, we had more than a few beers there too. It was great. It was really good fun, actually. But Rob, what do you reckon?
Yeah, so look, actually, full disclosure, I spent quite a bit of last night on the Teaminvest website going through a lot of the videos they post there, so great place for some news. And I was listening to Howard actually speak about Soul Pattinson, and he also mentioned that it'd gone for maybe 40 years where they'd never had a decreasing dividend, and obviously the Teaminvest motto or one of the ways in which you invest, and sorry for speaking for you.
No, I think please go ahead.
Are you on a commission or something?
If you've got a job open. Is about putting a lot of emphasis on the management team. And so I think that's where you have to defer to the management team here to say, look, trust them. They're making the right decision. For a long time, many years, they've shown to be able to grow the business, reward shareholders, be the stewards for the other shareholders. So at this stage, I'm going to say it's okay.
Yep.
That being said, there are some red flags that typically you look for in a takeover, which we are seeing here. So, number one, when a company uses scrip to pay, sometimes that's an indication that the management feel that their share prices are at pretty lofty levels and maybe not sustainable in the short to medium term. The other thing is typically when a company is the bidder, which Soul Pattinson are here, they technically usually take a hit on the share price because they're paying a premium, and everyone's concerned that they might be paying too much, and they want to wait until they see the synergies of the acquisition flow through. So look, I know Soul Pattinson do have a bit of an investing arm. It's more focused on REITs and materials, where this is more in line with a broader investment spectrum, like a Magellan type of thing. So it should play into their portfolio quite well. I'm going to back the team and say, yep, okay, they know what they're doing. I wouldn't go out and buy Soul Pattinson right now on the back of it, but if I held it, I'd be happy just to see how it plays out.
Yeah, it's definitely one of those things that if you are going to get it, it seems to me like that classic bottom drawer kind of stock. You can probably overanalyze when and not, but if you're sort of buying it and you've got a long-term horizon, well, if history's any guide, that's been a pretty good approach.
Like a CSL, just
exactly.
bottom drawer.